Case scenario number 6. This is on residential status and income from house property. Ananya Gupta, a citizen of India, underlined citizen of India, that will be relevant information for calculating residential status. Lives with her family in New York since the year 2000. Okay, she is a citizen of India living outside India. She visited India from 21st March 22. Now 21st March 22 is a part of last year, previous year 21-22. Current year begins from 1st April 22. She visited India from 21st March 22 to 28th September 2022 to take care of her ailing mother. Now she is citizen of India living outside India and visiting India for visiting mother. That means the basic conditions applicable for her, she will be falling under the first exception. She will be resident in India if she is present in India for 182 days or more in the current previous year, or second basic condition part A, she is present in India instead of 60 days, this will be replaced by 182 days. She is present in India for 182 days or more in the current year, plus she is present in India for 365 days or more in the immediately preceding 4 previous years. Simply, second basic condition is not to be checked. If she fulfills first basic condition, she will be resident, otherwise she will be non-resident. How many days she was in India for? She came to India on 21st March 22. That means calculation will begin from April. 30 days of April, 31 days of May, 30 days of June, 31 days of July, 31 days of August, and 28 days of September. She is present in India for 181 days. That means she is non-resident. Therefore, she will be non-resident. She does not fulfill the first basic condition of being present in India for 182 days or more. In the last 4 previous years, she has been visiting India for 100 days every year. So last four previous years she was present in India for 400 days. Agreed, she fulfills condition B of second basic condition, but second basic condition is not to be checked only, not required to be checked. So she is non-resident. She owns an apartment in New York which is used as a residence. That means New York residence is a self-occupied property. The expected rent of this house is $32,000 per annum, and the value of $1 may be taken as 75 rupees per dollar. Municipal tax paid in New York in January 23 are $2,000. However, she is non-resident in India and this property is located outside India. Therefore, this property will not be taken into account for calculation purposes in India. We know pretty well that maximum 2 properties can be considered as self-occupied property, but for the purpose of calculating maximum 2 properties as self-occupied, this property will not be taken into account because it is located outside India and she is non-resident. Okay, so this was the story with regards to, or the details given with regards to her residential status and her property in New York. 2 informations are given in first para. Second para, now she took ownership and possession of her house in New Delhi. This is the second house in New Delhi, but first house in India. She took possession on 25th March 22. That means last year 21-22. So current year she is in occupation of this house for the whole year. This is for self occupation. Underline this. This is definitely self occupied property while she is in India. This is used for self occupation while she is in India. The municipal valuation is 4,20,000 per annum. Fair rent is 4,50,000 per annum. And she has paid property tax, that is municipal tax of 22,000 she has paid to Delhi Municipal Corporation. However, if this property located at New Delhi in India, this turns out to be a self-occupied property, then this 22,000 will not be allowed as a deduction. This 22,000 can be allowed as a deduction only when this property at New Delhi turns out to be DLOP, deemed to be let out. If it turns out to be SOP, which we will check, if it is SOP, then municipal tax cannot be claimed as deduction because SOP property calculation begins with net annual value NAV. She paid it on 21st March 2023, current year. Payment has been made, but we will check what is the status of this property. She had taken a loan of 16 lakh rupees at the rate of 10% per annum from IDBI Bank on 1st April 18 for constructing this house for construction purpose. Loan has been taken on or after 1st April 1999 for construction of this house, and the construction got completed on 20th March 2022, that is in the current year, financial year 22-23. Okay, no amount has been repaid towards principal repayment so far. The house is vacant for the rest of the year, that is from October 22 to March 23. Why October 22 to March 23? Because she comes to India every year. Information is given, she comes to India on 21st March 22 and she leaves India on 28th September 22. So March, so that means April till September she occupied it, and then October to March it was vacant. Okay, so ideally this property also seems to be self-occupied property. This is self-occupied property number 2 located at New Delhi. Okay, first property is again SOP but located in New York outside India. So as far as Indian properties are concerned, this is the first property in India. She had a house property in Mumbai. However, this property has been sold on 28th March 22. That means last year. When was it being sold? Sold in the last year, 21-22. So we don't have to calculate capital gain also on sale because it is not happening in the current year, it is happening in the last year. Sold in the last year. In respect of this, so this property does not exist in the current year, but in respect of this house, she received arrears of rent. Arrears of rent will be governed by section 25A. It will be chargeable to tax in the year of receipt. She received 3 lakh rupees arrears on 4th February 2023. Though this house is sold, this is received in 22-23 ending second last month of the current year. This amount has not been charged to tax earlier. Though this property has been sold off, but arrears of rent will be chargeable to tax in the year of receipt, namely 22-23. However, what will be taxable as per section 25A will not be 3 lakh entirely. 3 lakh minus 30% standard deduction, so 2,10,000 only will be chargeable to tax. She does not have any income under any other source in India during previous year 22-23, and Ananya Gupta does not want to opt for the new tax regime under 115 BAC. Okay, so now what will happen is, how many properties are there? This Mumbai based property is already sold off. This does not exist. So there were 3 properties: SOP1, SOP2, SOP3. SOP1 is located in New York outside India, so that will not be taken into account. SOP2 is located in New Delhi. This will be taken into account because she is non-resident. Though she is non-resident, the property is located in India. That means place of accrual will be in India, whether positive income or negative income. Even for negative income also, the place of accrual has to be checked. And third property is located in Mumbai, but this property has already been sold. This property does not exist. So only 2 properties are there, and we know pretty well that maximum 2 properties can be considered as self-occupied property. But this New York property is not to be taken into account because she is non-resident in India. Therefore, ideally only 1 property will be taken into account. Question comes to an end. Now it says, based on the facts of the case of the above case scenario, choose the most appropriate answer to the following questions. Now before that, you need to understand that technically only 1 property is going to be taxable, and that property will definitely be self-occupied property, will not be deemed to be let out property, because only those self-occupied properties will be DLOP which are exceeding first 2 self-occupied properties. Okay, however, for this particular Delhi based property, there will be current year interest also. There is a loan taken. From self-occupied property, there can be either negative income or no income. Income would be either nil if it is purchased with the own money, or there could be negative income if loan has been taken. Here loan has been taken from IDBI Bank on 1st April 18. Since the loan is taken in 1st April 18 and the construction is completed in the current year, there would be some pre-construction period interest also. Loan is taken on 1st April 18, construction is completed on 20th March 2022. Current year, loan amount is 16 lakh, rate of interest is 10% per annum. So how to compute pre-construction period interest? Let's come to the calculation part. Okay, as far as pre-construction period interest is concerned, there will be 2 things allowable with regards to this Delhi based property, New Delhi based property, which is self-occupied property. Loan has been taken on 1st April 2018. So pre-construction period begins on the date of taking loan. That means it will begin on 1st April 2018. Pre-construction period, when will it end? It will end on 31st March, immediately preceding the date of completion of construction. Date of completion of construction is 20th March 2022. So this 20th March 22, actual date of completion of construction is to be ignored. We have to take 31st March immediately preceding the date of completion of construction. Therefore, the pre-construction period will end on 31st March 2021. The total pre-construction period thus will be 3 years. 18, 19, 19, 20, 2021. 3 years. And interest during pre-construction period, that's why will be 16 lakhs the loan amount into rate of interest into 3 years. It will be 1,60,000 per annum into 3 years, 4,80,000. However, For this we need to consider 1/5 of pre-construction period interest. Only 1/5 is allowed every year. 1/5 of 4,80,000 would be 96,000. 96,000 will be 1/5 of pre-construction period interest, plus current year interest is also to be added. 16 lakhs into 10% per annum current year interest, because no part of the loan has been repaid, so entire 16 lakh must be outstanding. 1,60,000 must be the interest for the current year. The total interest 96 plus 1,60,000 will be 2,56,000. However, since it is self-occupied property and not DLOP, had it been DLOP deemed to be let out, then entire 2,56,000 would have been allowed. But since it is SOP, it will be restricted to, interest amount will be restricted to, or deduction under section 24 clause B will be restricted to 2 lakh rupees as per section 24 clause B. Limit will be 30,000 in case if the loan was taken before 1st April 1999, or it was taken for any purpose other than acquisition and construction. If the loan is taken for acquisition or construction and the loan is taken on or after 1st April 99, then the limit will be 2 lakh rupees. We know pretty well. Now coming back, what is the question? So pre-construction and current year interest combined together for this New Delhi based property will be 2 lakh rupees. Question 6.1, what would be the residential status of Ananya? Residential, she will be non-resident. We already calculated it out. She is present in India for 181 days. Let's check what's Institute's answer. Institute's answer is D, non-resident. Our answer is correct. Okay, then 6.2, Miss Ananya Gupta can claim benefit. This is interesting. She can claim benefit of nil annual value under section 23 clause 2, that is SOP, in respect of, so which of the properties will be SOP? So 4 options are there. She is non-resident in India, therefore New York based property not to be taken into account. 1 property is at New York, 1 property is at New Delhi, and 1 property is at Mumbai. Mumbai based property is already sold off. New York based property will not be taken into account, we know pretty well. So only New Delhi based property will be taken. Her Delhi house will be considered as, she can claim this as a self-occupied property and nil annual net annual value with regards to this property. Now there is a clash between 2 of the answers. One is A, one is D. D also, please check it out. Both her Delhi house and New York house can be treated as self-occupied, since benefit of nil annual value under 23 subsection 2 is available in respect of 2 of the self-occupied properties or 2 of the house property. Technically this is also a correct answer, but why this is considered as a wrong answer? Reason is that New York based house is not to be taken into account because she is non-resident. Since she is non-resident, New York house is not to be taken into account at all. Therefore, benefit of self-occupied property will be allowed only for Delhi based property. A is the correct answer. Let's check what's Institute's answer for 6.2. Institute's answer is also A, Delhi house. 6.3, what is the income chargeable under the head income from house property in case of Ananya Gupta? Now SOP 1, which is at New York, this property is not to be taken into account, we know pretty well. SOP 2, which is at New Delhi, income will be negative 2 lakh rupees. How? We know pretty well. Income, this is SOP, therefore income could be either negative 2 lakh, maximum 2 lakh, or it could be nil. Here it will be negative 2 lakh. How? That we calculated it out. This will be reflecting interest under section 24 clause B, and the self-occupied property number 3, which is, we don't know whether self-occupied or not, which is Mumbai based property. Now Mumbai based property is already sold last year, but there are arrears of rent received in the current year. Arrears of rent, but arrears of rent after standard deduction taxable will be 2,10,000. It is 3 lakh minus 30% of 3 lakh standard deduction, 2,10,000. Therefore taxable income would be only 10,000. Correct answer is D, 10,000. Let's check what's Institute's answer for 6.3. Institute's answer is also 10,000. Our answer is correct. It is because of arrears. 6.4, assuming that for the purpose of this question only, Ananya Gupta has let out her flat in New York during the 6 months April to September when she is in India. If the New York based property is let out for a sum of $6,000 per month and the dollar rate is 75 rupees per dollar, such rent was received in a bank account in New York and then remitted to India through approved banking channels. Now remitted to India, that means India will be the second place of receipt. First place of receipt will be New York. What is the place of accrual? Place of accrual of this income will be New York, that is USA, since the property is located in USA. What is the place of receipt? Place of receipt is given here. Place of receipt is again New York. It is given here, received in New York, USA. And what is her residential status? Residential status is non-resident, since all the three things are outside India. Place of accrual outside India, place of receipt outside India, residential status also outside India. Therefore, New York based properties income $6,000 per month cannot be taken into account in India. In fact, this property itself cannot be taken into account in India. What would be the income from house property chargeable to tax in her hands in India for AY 23-24? Answer still just like previous question 6.3, answer here also will be 10,000, the way we calculated it out here. Answer will not change. New York property will not make any kind of addition to the total income. Answer will be still 10,000. 6.4, let's check what's Institute's answer. Institute's answer is also 10,000. With that, this case scenario comes to an end. See you in the next video with the next case scenario.